Hey traders, Raghi here, and we're taking a look at crude oil in this update. And where it is now is for about the first time in probably all of May that I've been really interested in potentially shorting crude as an overbought retest of nearly some February levels. So let's talk about the levels, and they're not price levels; they're actually volume derived levels, and this is the V-score. Now, some of you may not be familiar with the V-score. The V-score is something that I developed back in '08 to understand when we had kind of V-bottomed and whether or not we were going to recover from that financial crisis, if we were seeing size near the bottom, and whether or not it was okay, whether I felt it was clear to start rebuilding my portfolio. So I did this. This was not a trading tool. This was really a way for me to uncover whether or not I felt sort of big money via the size was getting back into the market, because I figured if you're going to coattail anybody at the end of a crisis, why not it be size and big money? So it took some time, but I started to then apply it to my trading with the same idea in mind, really very much thinking from a volume profile way. So fast forward, 11, 12 years later, V-score is a kind of staple on my daily and my 1-minute charts, and it's understanding, again, that kind of nuance, but from a trading perspective. And if there's resistance on this coming from that sort of mentality, it's here. And we're closing in on that, as you can see. We're also closing in on price levels. Now, why not just go with price only? I don't go with price only because, this is a nice high. Terrific. It's hitting a 21 exponential moving average. And this is hitting that same high. And folks would say, hey, that's resistance, right, Rog? It is, but I want to know what kind of size was happening here and here. Now, you'll notice if you just follow this straight down, it's not really impressive size. That level wouldn't have been something that would have, I kind of moved it at the last second, right there. That level really would not have gotten my attention back then. Not at all. Not really. But do you notice that even though we're coming up towards the very same price, volume, by way of the standard deviation measurement of the VWAP, is telling me something very different. We are coming up towards resistance in that sort of separate measurement of size. And I hope that resonates and makes sense, and I'll show more examples of this in the future. But crude oil has been very volatile. So I do want to be cautious, and what I'm doing is I'm looking at puts in crude. I'm not really open to getting into the July contract, but I'm looking at puts. So if you go out, you'll realize you have about 20 some odd days to expiration before, and I think it's 27 days before expiration for the July puts. So that's kind of close, but it'll work for me. And what I'm doing is I'm looking at the 34 puts. The 34 puts. You could even look at the 35s. That's fine too. There's a little bit more open interest at the 35s. There's a little bit more volume at the 34s today. So I'm looking at those at the money 34 puts, which are trading $2.35 by $2.85. And let me give you a little bit of insight into futures options. If you're looking at buying, and I am talking about buying a put or getting long the 34 put, each one of those is going to run you $2,300. So just know that. But when you think about $2,300 in terms of that put, about $2,380 actually, and it could be a little less because we could put our order in at the bid. But remember, our initial margin requirement for crude oil is $4,785. And, who knows what kind of crazy news we could get. Worst comes to worst. Let's think of a horrible case scenario. Crude goes limit up, right? I don't need to deal with that because I know that the worst case scenario, my max loss is what I paid for the option. So again, if I'm looking at those 34s, one thing I'll remind everybody is when the market's moving higher and you're buying puts, remember, put your bid in at the offer. You put your bid in at the bid. Put your bid in at the bid. Don't go to the offer. Do not go to the offer because you're wanting something that's not necessarily in demand on an up day, and that's the put. So that's going to make a small difference. We'll be paying about $2,320 for that, as opposed to $4,700, $4,800 for the underlying. So something to think about there. Why I'm looking at it, the position that I'm building, very small, but I like this level in crude. Okay, that's it for today's update. Hope that helps, some of the insight into how I like to bid on my options, the momentum that I like to use, and we are in the zone. Okay, so it's going to be momentum and zone, and then that's going to be, for me, that sweet spot to enter the trade. I'll see you in the next update.